Okay, so it's 2016, 4 years ago. Jesus, how time flies. Okay, so we made a presentation to the IA. Oh, this is not the IASB, this is the PCOB Institute. This is the PCOB once a year brings in audit standard setters from all around the world. And this was maybe 3 months after the IASB presentation. And I'm going to just jump to this fast. And so the presentation we did for the IASB was with the guy who was chairman of the IASB Technology Committee, Bob Dorr, who since became chief auditor of the PCOB, of the AICPA, and since then left to become the CEO of one of the CPA firms. And Phil McCulloch, who was the guy who developed the systems at KPMG, and he is now retired 2 years ago, and he actually works with us now and also does work for the AICPA. Okay, and these are the 4 stages that we talked: risk assessment, internal control evaluation, substantive analytical procedures, and substantive procedures test of details. And what we said, Bob Dorr presented this particular slide. He said, audit data analytics affects all of these, and we are going to need to change the way we think about this. And actually, the example was a KPMG example that Phil McCulloch generated. And there is a thing in auditing called three-way match. And the three-way match is for every invoice, shipping document, and sales order received from customers, you compare the invoice, customer, quantity, and unit price to the quantity shipped. So you basically verify if what you receive was, what you ordered was received, and if the price was correct. So that's the test. And what's the objective? Is to obtain audit evidence over the existence and accuracy of revenue. And you compare last year with this year to understand internal controls over the revenue process. So this was actually the example that Phil McCulloch came up. And this is a European company, generated 125 million euros in 725,000 transactions, which is not a very big database, but it's big for sampling. So 95.8% of the transactions were found not to have difference, because you use the computer to check. And then you found differences in quantity received and in pricing to about 2.3% and 2.4%. So the materiality threshold that was established in the first stage was £1 million. So both the quantity differences and the pricing differences were material. So that's the framing of the problem. Sampling would have examined 500 transactions. You wouldn't have really dealt with this set of problems. And so was this data analytics or was it automation? Second question, is risk assessment relevant if you're examining everything? And then what stage is this? Is this risk assessment or is substantive procedure? And what is the impact of going to the entire population? And is this audit evidence? and what level of evidence is needed on outliers. And then we had other examples, just doing predictive analytics, a little bit like I was describing to you on the weather study by Yoon. And then we talked about, and this is Yoon's actually, and remember I talked about clustering. If you look at the colors, that's the cluster. Look at purple. Purple is basically in Florida, in Texas, and in California. Look at the orange. Orange is basically in the kind of Midwestish stages and in the Northeast. The real Midwesties are pretty much together, the blue. And so this was like a whole different way to find audit evidence that we did there. And then this was a third example that we presented to them, was an insurance company. And we used clustering, created groups. And we found a group that had a lot of transactions that were paying, the insurance was paying off 7 to 10 years after that. And we kind of started wondering why was that? And that was a whole different story. I'm not going to go into it. But just for your illustration, we are at this moment doing serious study in clustering. We have Kathy, Hanchin, Hanchi, and Ching, 4 PhD students, second, third year, each one studying 2 clustering methods, now became even 3, under Professor Alice, and I am participating too, are looking at how you use clustering in auditing. And basically we are using the 8 routines that Caseware, which is a software AI, uses. And we are trying to validate if what they are doing is accurate. So we are very big into clustering at this moment, and this has the kind of questions that we asked at this stage. And so this is the radar. I just want to show you this one slide to recap about radar. And radar finished up having 2 studies. One study was the MAD study. The other study was a process mining study. And what I described to you is in this slide, and Professor No, who was leading this project, wanted to compare traditional sampling with the new approach. And he wanted to see the quality of results. I felt that was like comparing a rowing boat with a jet plane. And so comparison really didn't matter very much. But he did that in his paper. I just thought things were not really comparable. So what is match? You pick up the entire transaction, population. You ask auditors what can go wrong. And you extract those filters. And you get the notable items. And then the notable items, you kind of look at outliers in the notable item and choose the things that are worth examining that are exceptions. Reasonable, simple thinking. Will take a few years before the PCOB requires this. And you pick up those exceptions and decide which ones are worth examining if you have too many of them, which you usually have too many. Okay, so that's about, I think I'm going to stop here.